right there in the insurance ecosystem. Next up, ladies and gentlemen, we're going to be creating wealth online. The next company and speaker is a lady who is going to help you basically walk out of here richer than you than you came. It's an investment platform. They deal with individuals and businesses when it comes to in terms of stock and shares and basically investments. Ladies and gentlemen, please make welcome Desayo, the COO of Trove.
Let's clap a little bit more. We could do a little bit better than that. Awesome, awesome. Hi everyone, my name is Desayo, and I'm standing on all previous acknowledgements for all the dignitaries in the house. I'm here to talk about Trove, and so permit me a little bit to take you to school. This would be a little bit of schooling and just kind of talking to you about money. We've learned a lot about internet, about banking, about essentially how to make life work. But what's the underlying factor for all of that? We have to make money, right? Why are you here? You're probably here to understand how to make money and how to double your money. So that's what we're going to talk about today. So essentially, like I mentioned, why are you here? We all have purposes. Everyone is probably working for somebody or an entrepreneur trying to drive businesses. And I know we are passionate about the things that we do. I'm passionate about what I do at Trove as well. But really, the bottom line is that we're trying to make money. In fact, about half of the population of the world lives below the poverty line, which is about 3 billion people. I mean, that is it's not an incredible number to talk about, but it's something that we have to kind of face. It is incredible that we, as a people, as Africans, actually, we have to think about how to generate income for ourselves, not just for our families. I mean, the bedrock of things like education, healthcare is money. So we have to figure out how to get to that point of making money. So now, did you know that actually before you make money, the single most powerful thing you can think about is your mind. You have to almost see it, you have to visualize it, you have to craft it in your mind before it happens. And actually, Trove has made that simple for you. You can now do that at the comfort of your cell phone. I'm sure everyone in this room has a cell phone that you can use. And so, let's go to school. So if you think about where your money is, you can think about whether you're putting your money in your assets, one, or if your money is in liabilities, the cars that you buy and the toys that you like to have and you like to service, those things are good, but they're liabilities. You can also think about your stream of income, how you make money, how money comes into your hands. However, you also spend money for your daily activities, to either buy Tizeti, internet, or things like that. So we want to kind of categorize on the assets column today, because that's kind of how you double everything else that you do. So if you like to have fancy toys, you want to buy a yacht, you kind of need to grow your asset column to be able to do that. Now, like I said, we're going to go to school a little bit, and I'm going to talk to you a little bit about stocks. I'm sure a lot of you in this room probably know what that means. But let me kind of, refresh your mind a little bit. Think about stocks as the ownership of a company. Now, the amount of stocks that you own in a certain company would definitely mean would be commensurate to the amount of control that you have. So a favorite example I like to use is Tesla. If you have a piece of Tesla, you kind of can control Tesla, but you would not have the same control that Elon Musk would have, right? But if Tesla, grows and is doing better and things are going well for Tesla, then you probably reflect that in your own ownership as well. And at that point, you can decide to either sell the stock or kind of keep it to see where it goes. So, as we all know, or as we should all know, that investing, in the stock market is one of the best ways to build long-term wealth. You buy something today, and I'll kind of show a little bit of a demonstration for how that actually, multiplies. You buy something today, in another 10 years, it'd be worth a lot more, not just because of the factors that drive, the company and the growth of the company, but not just macroeconomical issues that we should probably, consider as well. Things like inflation would also kind of contribute to how, the stock market and the economy kind of grows, and the underlying factors of the stock market. Over the pandemic, actually, 2020, I think everybody and their moms were in the stock market. Everyone wanted to invest in the stock market because whatever you touched was kind of just going up to the moon, to the moon, to the moon. And it was great because at Trove, before that, we had actually come into Nigeria and we'd actually given people that opportunity. Prior to us coming into Nigeria, Nigerians did not have the access to be able to buy, say, for instance, Amazon or just another Facebook stock, for instance. Nigerians didn't have that opportunity, but following Trove, being in the market or being in the Nigerian industry, we were able to let Nigerians invest and play in those markets that kind of essentially leveled the playing field for a lot of Nigerians to things that people in the other world or the outside world or in the West already has. So I think that democratization that we already have before now, or that we were able to create before the pandemic, was able to kind of let people, we saw people build houses, we saw people send themselves to school, or even fund their kids' education. I mean, there was just a lot of wealth that Trove was able to bring into the Nigerian economic system. So, first of all, let's just demystify a lot of the things that people think, investing in the stock market is. If you're investing in stocks, you're gambling. That's not true. If you're investing in stocks, you should do your due diligence. You should understand the business. You should understand the business model. You should be confident enough to talk about the business model before you invest in, whatever stocks you are trying to invest in. So it's really not mini, money, more. Let me try this one or let me try that one. For instance, you've been sitting here all day. You kind of understand the whole book of work that Tizeti does. Now you can say if Tizeti was a publicly owned company, you can then say, all right, I really understand where Tizeti is trying to go. I see where they are. I understand their stock market price now. I think they're going to do a little bit further in another year or two. I'm actually going to invest in the company, so I'm going to buy one share of their stock, or 10 or 100, whatever that is. And you can actually also buy fractional shares, especially with Trove. People also think that investing in the stock market means that it is for brokers or like rich people. I don't have a lot of money, so it's not for me. I will just keep my little naira in my my wallet or whatever under my bed or whatever the case is. And that's not true. Like I mentioned, in 2020, everybody was in the stock market, and people actually gained a lot because the market was kind of going up. So it's not really for just people who know how to do it now, because you can also learn, and it's not for people who seem to have a lot of money, because you can actually start with as little as 5,000 naira in your wallet right now. Now, there's also this whole myth that if anything goes up in the stock market, it must come down. I have to acknowledge that there are corrections in the stock market, but it doesn't mean that anything that goes up must come down. The laws of physics do not apply in the stock market. Again, if you do your due diligence, you do your homework, and you ensure that what you're investing in is not just, a gamble, it's not an AMC when the whole thing was happening, or a GME. Any of that stuff, and you really believe in the company that you're investing in. You can talk about the economics, you can talk about the fundamentals of what they do. It doesn't always mean that they're going to come back. Now, there might be a correction, things might happen, it might decrease a little bit, but if you have a good future outlook, the only way would be up. Okay, so how do people who hold stocks, how do they make money? There are two different ways to make money in the stock market. Now, the first one is dividend stocks. So essentially what this means is you can invest in, say, legacy institutions who are already established and actually give dividends. And we'll talk about a few of those actually in the course of the presentation. Another way is you can invest in growth stocks. Like I mentioned earlier, Tesla is a growth stock. And what you are really betting on in the dividends category is that, all right, these people are very established. They already have their kind of proof of work. They've done this for many years. And so every quarter or every so often, every period, whatever that timeline looks like, they will pay me a certain token. And so I would, earn money, and this would be a way for me to earn passive income. And that's usually typically guaranteed. And all of that information honestly exists everywhere. And you can definitely get that information in a Trove app as well. But on the growth side, what you're betting on is that, well, if I invest in Facebook now and I put my 10,000 naira in Facebook, I like where Facebook is going. They're doing Oculus. They're doing all these different, minor things. And I think that with the metaverse, I think that they're going to go, 10x, 2x, whatever that number is, based on your analysis. Then you're betting that whatever amount I put right now, in another couple of years, once Facebook is able to achieve the things that they have set out to achieve, that money is going to grow. That money is going to go from 10,000 naira to maybe 15, maybe 20, maybe 100,000 naira, who knows? But those are the different categories that you kind of bet on when you are invested in the stock market. All right, so dividend stocks. So we have a list here, and this is just an example. There are a slew of other stocks in the stock market that pay dividends, but I just wanted to give you a flavor of what happens. And you can, again, invest in both stocks on Nigerian exchanges. You can see MTN is here, pays an average dividend of about 7%. There's also Dangote stocks, but you can also see there's Chevron, there is Wells Fargo, that's a bank, AT&T, that's in communications. So if your game plan is, hey, I just want to get passive income, I just want to get some dividend yields somehow from these stocks, then you will have to tailor your strategy and you have to align your strategy to that effect. And then you can see, all right, is it okay for me to pay this amount of money to be able to earn this dividend? Kind of think about it as like interest on your money over X period of time. Okay, so examples of growth stocks. I already talked about Tesla. And if you invested in Tesla 10 years ago, if you invested $1,000 in Tesla, right now you have about $150,000. And yeah, I would love to have that too, but a lot of people probably don't have that patience. The same thing for Amazon and Apple. If you invested $10,000 in those companies about 20 years ago, maybe you probably didn't have the opportunity to do so 20 years ago, but if you did, you have multiples of your money now. And the good thing is, Trove has provided you that access today, so you no longer have to wait another 20 years to say, oh, I wish I did this in 2022, when you can actually get started today. Okay, there we go. Another way to invest in the stock market is through ETFs, exchange-traded funds. Now think of ETFs as a basket of stocks. So say your style is, I'm not in the business of picking winners and losers. I like the tech stock kind of industry, but I don't know who's going to win, I don't know who's going to lose, and I don't want to have to pick those individual stocks. I would rather invest in something that has like a basket of stocks. What that means for you is you can kind of hedge your bets. And so if one particular stock is not doing as well, that's okay because you don't get to fill that kind of pull down. But on the flip side, if one of those stocks as well is not doing that well, or is doing that well, you probably wouldn't get the upside as much as you would. So it's almost like a hedge, but at least you're in the stock market and at least you're trading something. So it's almost think about it as like diversification. I don't want to pick individual stocks, but at least I have a basket of stocks that I'm guaranteed that not everything will probably crash at the same time. So it's it's kind of protecting your choices. But before picking the ETF that you want to invest in, which is kind of what I tell people to start with, especially if you're new in the stock market and you don't even know where to start, you want to think about, you could just start by Googling what are ETFs or examples of ETFs, and Google will just like send you a bunch of options. Or you could go on your Trove app, if you download it today, and just kind of look for the ETFs in that category. A few things that you want to look for in ETFs would be, one, the trading activity. So you want to make sure that there is volume on that particular ETF, that people are talking about it, that there is just data, and that they actually are playing in the stock market. You want to see what's in the basket as well. You want to make sure that the kind of stocks that they're picking, that you actually believe in them, that they're not obscure, that you've heard about them, that you probably think that they are foundational. You want to do your own due diligence on the kind of pool that they've assembled together. And lastly, you want to kind of think about the age of the fund. So you don't want to invest in something a fund that was just created a year ago, because you don't know, you don't have any data on them. You kind of don't know how they're going to outlive, or you don't have extensive data that dates longer than a year. So essentially, try to look for things that are more than maybe 3 years old. 5 years and 5 years plus would probably be the best case scenario. But make sure that you're investing in something that people have tested and proven that is a good ETF. Now, let's get started with Trove. I don't know how many of you in this room have heard about Trove, but essentially, Trove is a financial platform that is accessible, is right there on your Play Store, on your App Store. that you can use, you as individuals today can use to begin to access the stock market. You can access the Nigerian Stock Exchange right directly from your Trove app. You can access the New York Stock Exchange directly from your Trove app and the other exchanges in the US. And as businesses as well, you can also do the same. And I would give you, a contact in case you wanted to get started. All right, so if we think about you've downloaded and now you're ready to kind of jump in. You want to think about how do I allocate my assets? I have this money set aside, I have this 100,000 naira, and I want to kind of figure out how I want to play in the market. Like I mentioned to you, your options could be, hey, I want to buy direct equities, so I want to buy individual stocks. I know the stocks I want to buy. I'm very bullish on them. They're going to do incredibly well, and I'm ready to wait, 30 years. Say, for instance, today you're 20, and you're willing to wait another 30 years for one business or a certain individual stock to really do what you think it's going to do in terms of executing all their plans, then you have to think about that by age. So your particular circumstance could be different from somebody else whose risk profile is completely averse. I don't like taking risks. I want to make sure my money is there. I want to make sure when I open the app tomorrow, my money hasn't done. There's no volatility on my money. That's another way to kind of, plan your asset allocation and things that you invest your money in. Another thing to think about is, what are your investment goals? Are you just trying to really make a lot of money very quickly? And does that mean that you can, withstand some volatility? If something has the opportunity or potential to go up really quickly, they probably also have the potential to go down really quickly as well. So you kind of want to just make sure that, all right, I'm not playing in the stock market, especially aggressively with my school fees, for instance, or my kids' school fees, for instance, or something that has to do with, a huge part of your asset allocation or of your savings. You want to make sure that you're thinking about, all right, how old am I today? What are my investment goals, and how much of the volatility in the market can I really weather? Do I want to play on the safer side and just get ETFs and just watch my money grow, by token every day, or how do I want to kind of play my accessibility in the stock market? Now, what's next? So now you've determined how you're going to allocate your assets in the stock market. I'm going to buy some ETFs, maybe going to buy some individual stocks that I'm very bullish about. What then do you do? Now you actually just contribute regularly, which is, there's this whole thing about you not being able to time the market. You might buy something today and it might feel like, oh, I bought it at at a high, but if you actually invest consistently, well, what's going to happen? You're probably going to catch the bottom at some point as well. So you can't just say, all right, I want to invest 200,000 naira, for instance, in the stock market, and I'm just going to do that on one day. It's actually it's better for you to just start doing a little 5,000 naira today, 10,000 naira tomorrow. When I get some more money, I'll do that as well over a long time. That way you can do something called dollar cost averaging. You can actually begin to put your money in and catch either sometimes the bottom, sometimes just like a very sane price point of the stock, and just kind of grow with the business like so. I was still talking about the last slide. Let's go. Now I'm trying to go back. Okay, and then another thing is, as you are building your portfolio, you want to make sure that you are also rebalancing and you are adjusting as necessary. Your goals might change, your risk profile might change, and you're also growing older by the day, right? So you want to make sure that if you feel like you are a little too aggressive or a little too diversified, you want to pull back a little bit and maybe put things that you're more comfortable with. Maybe you were invested in a lot of individual stocks, for instance. You might say, all right, I'm going to get out of these individual stocks and do a lot more ETFs. Or I feel like I have a cushion with my ETFs. I'm going to branch out into a lot more individual stocks and kind of, see that upside. Now, you might not know where to start at all. You might feel like, I don't even know where to start. I don't know what Desayo is talking about. Where do I go? Actually, Trove is also in the business of educating you. So if you download the Trove app today, we have something called Trove University. What does that do for you? It takes you from literally zero knowledge to becoming an expert in the market. You have everything from understanding financial planning to understanding market insights. You can literally put a stock in there and it will give you all the information you need to know about making a decision on that stock or on that ETF. And those different branches and things are Just very, very easy for you to do on your Trove app. Get started today. We are on the Play Store, we're on the App Store, as well as the web. And like I mentioned, if you're a business here, your business can also own other businesses. Your business can actually own stocks as well. So if you want to reach out to us, please do so. That's our email and our website. Do check us out. Thank you so much for your time.